The benchmark price for an apartment in Calgary is now $334,000, up $2,800 from last month and up $4,600 from last year. I would imagine that we're going to see some price decreases in the apartment market in 2025. So let me tell you why. My name is Adam Fife, your Calgary real estate agent, and if you're looking at getting some more information, I would strongly recommend that you click the links in the description, as there is a lot of things for you to check out. If you want to read the PDF reports on your own, here they are. If you want to book a call and have a conversation about what this could look like for you, click the link. If you want to know what your apartment is worth in today's market, go ahead and click this instant home evaluation tool. Or if you want to know what's going on in the city, I update this every couple of weeks. Here's some events for you to check out. It's all in the links in the description. But let's talk about those apartments. So this is what the Calgary Real Estate Board has written about the apartment market. If you want to read it on your own, pause the video, skip to the next chapter, I won't be offended. Sales reached 473 units in February, 26% lower than last year, but still well above long-term averages for the apartment sector in February. New listings were relatively flat year over year, but at 852 units, it was the highest amount on record for the month. So we're still seeing a lot of new listings come to the market. Driven by record new listings, inventory increased by 90% year over year and also pushing to near record levels. Months of supply reached 3.1 months in February, a substantial 155% increase over 2024, but still well below record levels seen in the period between 2014 oil crash and the pandemic. So very evident here that we're seeing a lot of new listings come to the market and a lot of inventory left over, and it's just the beginning of the month. I would imagine this trend is going to most likely continue in 2025 as we see a lot of renewals come up for mortgages, people who have renewed at ultra low mortgages, as well as some uncertainty what is going to happen in this market through tariffs and political policies. So let's dive in and figure it out. So for $334,000, what do you get? In the link, there's a benchmark attributes, which goes to this spreadsheet here, which I've created. Go over to the apartment sector down here, and you can see city is center. This is the attributes for the city. 2 bed, 2 full bath, 880 square foot, and a 2006 building. So obviously, if you're going to get a new building, it's going to be a little bit more. Maybe you're going to get a little bit of an older building, and that's going to be a little bit less. But we need to make sure that we're putting the benchmark attributes into play. If you're going into individual quadrants like west, city center, east, southeast, south, there's going to be different attributes for each individual city, and we'll touch on that in future slides because it's very important to realize that there's attributes behind these prices, right? We're still seeing a 4% year-over-year growth, which is about $4,600, a month-over-month increase of $2,800 as well. So from last month, we have seen a decline of the year-over-year growth of about 1.3%. So we are noticing a slowdown in the year-over-year growth. I wouldn't be a bit surprised if we start to see some year-over-year negatives within the next 3 to 4 months. But that's just an assumption, and I'll explain a little bit more why in a second. So this graph here shows the last 12 months. The red bar is the price point. We're starting to see a small little rebound from the lows that we saw over the winter, but we're also seeing a pretty big increase in inventory. Sales have upticked, which is good to see, but the inventory levels have also upticked pretty rapidly as well. So we are seeing a little bit of a price increase, but I would imagine the gap between inventory and sales is probably going to widen as what we saw in September of last year. A lot of inventory, not a lot of sales. May of last year, you can see just how tight that gap was. We had the most amount of sales, the lowest amount of inventory, and the pricing was continued to increase. Now, this next chart here, same information, just a little bit of a numerical value. We've got our sales, our new listings, our inventory, and our days on market. So our days on market is 42 days, right? It's the most that we've seen in quite some time. It is down from November, December, and January, but when comparing to last year, especially at this time last year, we were at 35 and 26 days on market. It was a super hot market for apartments. I wasn't sure if it was going to last very long, and it didn't even last a year. So now we're going to see probably some correction coming to our market. So you got our benchmark price with those benchmark attributes, our median price, which is just sliced right through the middle. It's that median price point. And then the average. I'm pretty sure a lot of you know how to calculate average. So that is that. Let's continue on here. Now, this is a quick highlight of the entire market. Now, let's remember, we're at March 12th when this is going to be uploaded, which is literally today, right now. And this is a little bit out to date, and I'm going to touch on a couple of updated pieces here in a second. So we've already touched on the month of February. The only thing we didn't really touch on was a sales to new listing ratio of 55%. So only 55% of the new listings were sales, kind of cutting that in half, which is obviously not a good sign. List to sale price was 97%, down from the 100% that we saw last year. And then you start to look at the year-to-date numbers here. You can see that we're down 20% in sales volume. We're down 25% in total sales numbers. New listings were up about 20%. Inventory is up 90%, right? We're almost double what we saw last year. Months of supply, sales to new listing ratios, sales to new list price, all that jazz. Now, one of the things I want to bring up is the total year-to-date sales and the total new listings. So when I go over here and I go to these daily housing summary, you can see that now, today, March 12th, we already have seen an increase in sales. We went from about 850 to 1,000. So about 150-ish sales increase from this time. But let's look at the new listings. From March 1st to March 12th, we have seen an increase of 400 new listings. We went from 1,700 to over 21, right? So 400 new listings. So that means we've saw 200 new sales, but 400 new listings. Again, starting to continue to increase that gap between the sales and leftover listings. Now, this is over the entire city. We do need to break it down into quadrants, but we are continuing to notice that trend already 12 days into the month. So just wanted to bring that up because I think it's pretty interesting. So when we start to look at the sales, right, we're still doing relatively well, right? Calgary is still seeing a lot of activity in terms of sales. Yes, we're not at the ultra highs that we saw last year, but we are still above that 10-year trend or that 10-year average, because if you look at 2021 to 2025, we were super, super depressed, right? We're seeing over double the amount of sales in February that we saw in years past. So in terms of sales, not bad, right? You start to look at the sales by price range. You can see that the red bar is 2025. Yes, we're starting to see some declines. The sub $300,000 market is slowly depleting as we start to see more price increases. We're going to see an increase in the 300,000 and the 400,000 as we progress. Interestingly enough, year to date, again, just the first 2 months of the year, we saw a few $1 million sales, and that kind of got me curious. So I pulled up this chat here. So already in 2025, we've seen, looks like $5 million plus sales compared to the 2 that we saw last year. So the luxury market in Calgary, still moving, still seeing some sales there. But yeah, interesting stuff, especially for the month of February, right? Just the difference there. Year to date, can't do that math super fast off my head, but we're still seeing some movement. I thought it was kind of cool, just wanted to bring it up. Now, sales by price range, this is over the entire city. This is an interesting breakdown because you can see that, you know, the $300,000 market is still dominating the sales when you start to break it down over the entire city. But it really is not important for this chart. You can see that in the yellows, which is the apartment sector, the city center is always going to dominate, followed by the southern portion, the southern quadrant, just because the southern quadrant is the second largest, where the city center is the largest. So you can see a lot more activity, followed by north, west, and southeast. Now, new listings. This is obviously going to be the hotter topic in 2025, for those of you who are still with me here. This is going to be the conversation that I bring up every single month about this apartment sector, right? How many new listings are coming to the market? How high is that inventory getting? Yeah, we still might have some record-ish high sales. We still might be doing strong. But if we have a lot of inventory and a lot of options to choose from, people are going to notice that they can just ride you down a little bit more for your listing price because they have more options, because you're going to stay on the market a lot longer, because there's just a lot more selection. So you can see here, very obvious that we're seeing an increase. Now, when we start to look at the inventory levels broken up over the entire city, because this is total inventory, you can see that we're still not as high as what we've seen in years past, but we have more inventory than we did in 2013 and 14, which were our previous booms that we saw, and then we're much higher than what we've seen, especially last year, right? The 2022, 2023. I would imagine total inventory is going to continue this trend of increasing, and the apartment market is going to lead the charge in increasing that inventory for the total city number. So we just need to make sure that we're breaking it down into individual property types when you're looking at totals across the entire city. So the apartment market is obviously on an upwards trend going towards a buyer's market. Pretty obvious. We can see it across all charts. I would imagine we're going to see that go upwards of 4 months, maybe even 5 months into 2025, which is going to put downward pressure on prices. We might still see some price increases potentially, but I wouldn't be surprised if we see a flat line in 2025 in the apartment market. I just don't right now see those increases like I am seeing in the detached market. That's completely opposite of what I'm seeing in the apartment market right now. So if you want to know what your home is valued at, go ahead and scan this QR code. It's super slick. It is a auto home evaluation tool. It's very, very neat. You could do it a few times a year if you want to know exactly what your apartment is worth. If maybe you have an investment property, you just want to know how much equity you have. Maybe you're looking at renewing your mortgage. Maybe you want to put it up for sale and try out the market. I'll leave that up to you, but you can go ahead and scan it here. It's very interesting stuff. So this is the macroeconomic breakdown. This is exactly how I word it. This is the individual quadrants for the city of Calgary. Now, a couple of things here. You got your sales for the individual quadrants, your new listings, and your sales to new listings ratio, right? You can see that Northeast has seen the lowest sales to new listing ratio for the month of February. 27 sales and 62 new listings in that month, indicating that there's only a 43% sales to new listings ratio. That means that they are at over 5 months of supply, clearly a buyer's market in that quadrant. So if you are looking to purchase in the Northeast, take your time. Find something that works for you. Make sure that you can get a good price on that. If you're looking at selling a property in the Northeast already in March of 2025, take your time. Figure out what is going on in your building, in your localized community, and how you can position your condo to find success. You do not want to be on the market for very long. You don't want to be on the market longer than 20 days because then you're going to absolutely get grinded down in price point. It's not fun. You can still see a majority of listings are still under 3 months of supply. You can see south is still technically, east even, is technically the hottest, but they do have very few sales. There's not a whole lot of apartments, and they're pretty cheap. They're still only $252,000 for an apartment, which is fantastic, very affordable, so obviously they're still going to fly. But you can see south here, that's an interesting one. They have 2 months of supply, right? They're still seeing price decreases, right? They had a massive $7,100 decrease in the month of December to January, and now they're seeing another decrease in the month of January to February. So they are still seeing some decreases, but they're still technically the hottest market, having 75 sales and 100 new listings. So things are still moving there, but yet they're seeing some decreases. Very interesting stuff, right? You start to look at the city center, it's kind of the opposite, right? We're kind of playing against the grains here. They have under 50% sales and new listings ratio, yet they're seeing price increases, right? So you do need to be careful, or not careful, but you do need to be informed as to what you're doing and what you're getting into, right? You want to make sure that you're going through the data, you're going through the MLS, you're going here, you're looking at, city center, we're going over to the results, we're looking at localized data that's, specific to your personal needs. Maybe you're listing, maybe you're buying, maybe you're investing, and going through and looking at some of the communities of interest, right? Here's one in Mission. Took 24 days, 250 sold, 255 sold for 250, right? You've got one here. It listed after 24 days, it was 370, it sold for 357. So a little bit less than what they listed it for, but it still sold relatively quick. Both are one-in-ones, 1984, 2015, very different there. But either way, point I'm getting at, do your data research, make sure you know what you're getting into. Don't just jump into the market and learn as you go. Do your research ahead of time. You'll thank me later. So with that being said, I found this super fascinating, okay? Condos in Calgary have seen year-over-year increases consecutively since early 2021. That means that the price has consistently grown for our apartment market for the last 4 years, 3.5, 4 years, okay? So with that being said, I would imagine we're probably going to see some year-over-year decreases in the apartment market in the short term. I don't think we're going to crash. I don't think we're going to see major corrections, but I do believe that we're going to see an increase in inventory and a slowing down in the market, causing some price declines when you look at the year-over-year scales in the short term over the next 6 to 12 months. So hold off and do your research. Now, if we look at this price here, again, we're kind of looking at that price point, 2021. Every single year, we've seen an increase in price point, and we're even starting to bounce back a little bit here. I would imagine in 2025, we're going to see some increases in inventory, lots of options, and really slowing down that price point. I don't think we're going to see a crash where we're going to dip down super, super low in price point. I think that we're still relatively affordable when you compare to other cities in the country, but we're going to see a lot more options for you to choose from. So with that being said, go ahead, reach out, book a call, let's have a conversation. If you're interested about anything to do with the real estate market, let's go in, dive into the data, go to the PDF files, look at what's going on in your community, and have a conversation. Thank you very much for those of you who have stuck it through this entire video with me. If you have any questions, comment them below. Some of the questions are absolutely hilarious. I love the trolls. I'll troll you back, and we'll see you on the next one. Peace.